Good morning, everyone, and welcome back to Morning Markets. A couple of things to discuss this morning, the first of which was looking at the US employment number that we had yesterday, and that was looking at weekly jobless numbers. So over the past couple of weeks, we've been discussing the rate of improvement in the weekly claimant count, where that has been gradually slowing down, and we were seeing the past couple of weeks very small improvements on a weekly basis. And that was a combination of factors, but primarily the impact of rising COVID-19 infection rates in the US and various different measures at a state level that were either rolling back on some of the reopening plans that had been in place or reimposing more strict measures that were in place earlier in the year. And that's had an impact on the claimant count. So we saw the claimant count on a weekly basis step up over the past week, and the number that we had yesterday was 1.4 million. That compares with 1.3 million the previous week. So a step up in the weekly claimant count. Interestingly and positively, we still continue to see the ongoing claimant count coming down. So that stands at 16.2 million at this point in time. If we go past our minds back a couple of weeks ago, we were in a situation where we were above 18 million. So that continues to improve, and that is a positive. We need to see that be sustained, and that'll be interesting to see over the coming weeks because of the claimant count on a weekly basis moving in the other direction. That in and of itself caused, I think, the market to sort of reappraise just where it was. We saw a little bit of weakness in equity markets, and interesting to note that we saw growth equities underperform the broader market yesterday in that environment. The other thing that we did see was ongoing improvement. So in the bond market, we saw yields continue to fall, and remember, a falling yield is positive for the bond price. Why do I mention that in the US? Because over the past number of months, we seem to have been operating in a relatively tight corridor with the yield on the 10-year with a floor at sort of 60 basis points or thereabouts. Yesterday, we moved through that with the 10-year in the US closing at 58 basis points, so just slightly below that floor that we have seen. The other thing, just another sovereign bond market just worth mentioning in the UK, we saw the UK gilt continue to come in as well, the 10-year, and that's now trading at 12 basis points. Interestingly, despite that backdrop of a weaker equity market and stronger bond market, and one could potentially describe that as a slightly risk-off environment, we didn't see the dollar react in the positive sense as it normally would, strengthen in that sort of environment. So that is something that we continue to monitor. We've touched on that over the past couple of days about dollar weakness and euro strength. So interesting to observe how that was sustained yesterday despite some of the headlines that we've just discussed. The other thing that clearly is front and centre of the market's mind at the moment is the ongoing tit for tat between China and the US. We saw obviously the start of the week, the US deciding to close one of the Chinese embassies in the US, and overnight we've seen China do the same thing in China. So that just continues to bring geopolitics to the front and centre of market participants' mind. And it'll be interesting for us all to think about how that plays out over the coming months and indeed years. The other thing just to touch on finally this morning, retail sales in the UK. We saw a very strong bounce back, building on the improvement that we saw in May. So retail sales in June up 13.9%, just indicating as lockdown has eased, we've been able to go out, and expenditure has increased as a result. Important now to see how that continues to build over the coming months, because clearly that is a rebound from a very depressed level caused by the complete closure of the economy earlier in the second quarter. That's it for today from myself. Please look out for Chart of the Week from my colleague Chris Leyland, which will look at and discuss the strength of the euro. And then we'll have our weekly roundup coming out later today. So please look out for both of those. Many thanks.